Good afternoon. This is the Elliott Wave Daily Update for the NASDAQ 100, being recorded on Tuesday, December the 2nd at 2:40 p.m. Pacific Standard Time. Um, the market did a little bit of everything today. It finally did move up and moved above where I've marked the top for Minuet Wave 1, giving us the impression that we have the possibility that we have a 1-2-1-2 and just kind of grow on that. And we're just going to go from here, and wave two would have been put in down here. That stayed pretty much in place as a possibility until I went down to the 15-minute chart and I put it on a line chart because I wanted to see what all this was. Because in order for that to be the case, this be one and this be two, so this had to be 1-2, and this has to be 1-2, and this would be what? Another 1-2. So you can kind of see that it doesn't fit. And so what it goes best as A, B, C, or A, B, and then we get a 5 for C, and then we get an ABC down for a B wave, and then we do 5 up for wave C, and that is why I put it in as wave B. So minuet wave 1 coming down. We have a minuet wave 2, which now has done an irregular B wave. Now, here's how I look at this. Wave 2 cannot finish above where wave 1 ended. But in an irregular, it can go up and finish down. So leaving it incorrect in order, but goes up and produces an irregular B wave and still comes back down. And that, I believe, can be what's happening. So we have A, B, C, A, B, C, B, 1, 2. And I know it's a big 2, and it takes back quite a bit of wave 1. Same deal. Wave 2 should not take it out. In other words, this is finishing up rather than down. So I wouldn't be looking for it to do that. Whereas here it's doing it. But so either way, I want to tell you here, if we start to come down, that's fine. It'll fit into a C wave, which will be 5, and there'll be 1 of C, 2 of C, and we just start coming down. That's going to be the tell. We'll get a lot of tell if we see this thing start to come down. And of course, if it starts to break below levels that should hold it, it's going to give more confirmation that we're starting to form the next 5-wave sequence down. Because let's not forget, we're in a C wave. And C waves are always 5. In this case, the C wave is going down. So wave 1, 2, 3, 4, 5. Now, because of the irregular nature of this wave, we'd be looking for 1.618 to be reached in terms of the fib levels, and that's 25,098. So I'd look for wave C to come down here. I put the 2 underneath it, the minuet wave 2. It does go beyond 0.236, but it comes in a little bit shallow, and that's 1.618, by the way, of 0.382, which pretty much for second wave, I would say is like the minimum. But because we're getting a lot of underlying support for the market, I don't want to say bullishness, but that's really what it is because it's buy support. So what buy support also tells me is that within the NASDAQ, we're still getting, and I'm fairly convinced that it's coming from within the Mag 7, the buy pressure is coming in there as we go into year end, and where they want these big, very wealthy companies, big capitalization, where do they want them to go out? Because everybody needs it in their portfolio, or they got to trim the portfolio or whatever. So these are the stocks that sit everywhere. And now we're coming into year end, and decisions need to be made on how much you're taking forward, where do you want to book it? And so et cetera, et cetera. So we got a lot of that going on too. So year-end stuff on top of the Fed next Wednesday, on top of still waiting to receive a backlog of economic data produced by the government. We got a lot of stuff kind of going on economically in terms of short-term picture to mid-term picture to even long-term picture. Because again, through all of this, this is a finishing rally. Remember, I've gone over this so many times that because as I'm counting it forward, and we've been counting up fives, and now we're in the last sequence of fives, and that would be on the minuet degree. We're going to see them on the sub as well. But in terms of this rally, when minuet wave 5 is complete, it's going to finish minuet wave 5, minute 5, minor 5, intermediate. Oh, here, minute 5, minor 5, intermediate wave 5, and primary wave 3. So it's going to be, it's an important top, and we're in the last leg. We're in minute wave 5, and we're working on finishing minuet wave 2. So yes, there's still upside, but this is not beginning. This is not breakout. We are going to appear to break out because we're going to new highs, but this isn't like I do not take this. I think this is finishing, not beginning, and not even like we're breaking out. Now, on an intraday basis, yes, you're going to see breakouts. You're going to see thrusts. You're going to see, gaps because it's all different set of things. Right now, what am I looking for? I think we kind of come down and finish the C wave. What's the alternate? The alternate is a tough one because, as I just showed you, this looks best as an A, B, C, A, B, C, B, 5 waves up, C, to put in that B wave. If I had to change that and say 1, 2, then wave 3, somebody might say, oh, wave 3 then is a diagonal. It's like I've not seen them in the third wave position, and so they don't happen in a third wave position. So it becomes a little bit more like, okay, how else do we count it? 1, 2, 1, 2, 1, 2. Yeah, I could, but what does that suggest? We blast out of here. So these are the tells. 1, 2, then I'm going to count this 1, 2, 1, 2, 1, 2. And so the thirds, it should blast because it's in a 3 of 3 of 3 move. And that would be pretty quick. So what does that suggest? Definitively above 25,758, but likely above 26,000 up towards 26,900. Wanting to go take a look at 27,000, and that fib level represents where minute wave 5 would be equal to minute wave 1. And I would just have to take it not too far. That's minute wave 3, minute wave 4. So we get minute wave 5. It's where it would be equal to minute wave 1, which topped on April the 9th after reaching its low on the minor fourth wave on April the 7th. So again, these and it also time-wise that everything fits in terms of how quickly this could move. Year-end, Fed, data, a lot of stuff could have a very strong effect on an intraday move or even a couple of days move. And so we have to keep open to everything, in my opinion, particularly if you're a day trader, because inside these moves, it's been real strong. All right, makes a new high in terms of the whole sequence, and then just takes a nosedive. If you're a day trader, it went from 25,649 to 25,459, 170 points, 200 points, real quick. That's in 15 minutes. So big moves in terms of because let's put it this way, 20 bucks a point, and we moved 100 and some odd points. Okay, so there's plenty. And that's what I'm talking about when I say as long as the trading is going to continue, you're going to have plenty to do. You just got to be quick. You have to be honest. You got to be not. And mindset's also important to kind of trade. But in any case, I think in a bit longer term, I am looking for a top, and then things really will change, and the whole cycle will be pointing to the downside. So back over here. In the meantime, back at the ranch, I think we get a C wave. I think we finish this off. I'm not looking for it to get that deep. We're at 25,600. I think 25,098. So yes, it's 500 points, but I think it's going to do it real fast and shake everything up and then start all over again in terms of the next sequence up. So I'm not looking for it to majorly fall apart here. I'm just looking for a wave two. And there's our markers, by the way. That's my minuet. There they are. And so you see 0.236, 25,159, 1618, because it's irregular, no big deal. But I think it can go spike and go. That's what that kind of tells me as well, that you could see it come down, spike, and just go from there. Or you at least could look for it. All right. So gamma remains also very important, as do volatility triggers. So a lot of things happen around the volatility trigger. In the case of what we're looking at here in the NASDAQ, you really need to kind of keep an eye on the cues. Why? Primary reason, in the cues, the options trade much, much heavier. Even if we're combining the NQ and the NDX options and put them together, Qs still do the majority, way in the majority. So when the Qs are breaking through a volatility trigger in either direction, you'll suddenly see that risk on, risk off trade start to go into action. It's interesting. So you might think, oh, why is volatility going in the direction that's not congruent with what the market is doing? So, but that could be why. In any case, I look at the Qs and she got up to 622 and 615, I believe, was the volatility trigger. So it made it back above there. And I believe also that it had to have made it above, oops, wrong one. Sorry about that. Make it above the one other, like a large gamma level. Let me just take a look real quickly. Yes, no, it didn't get up there. It wanted to. So yeah, it did. Sorry, take it back. So 615 was the volatility trigger. 620 was large gamma 1, and it got above it, closed above it. That's a positive to the upside, I have to say. Because if we see, unless they bring it back down and they get it back below large gamma 1, where it was, we'll see what level it resets to. But right now, you might look from the cues. If I had to take my cues from the cues, then it brings that other. Even though what that looks like, what did I say? 1, 2, 1, 2, 1, 2. It would be a kaboom. It would be a kaboom to the upside. Because there's a lot of covering, a lot of stuff. Okay. So I'm leaving it as is. I'm calling it a B. I'm going to trust the market is going to let me know. And that, like I said before, the tell is either going to be coming busting up, which I would look at as a breakout, and that it's a third wave. So, and in that case, you could take and do a fib from there to here. Oops. Now there's your third. 26, 26, 197, and higher, folks, and higher for the third. 100 all the way up here. 26. Do I think that can happen like this week? Well, no, maybe not. But in combination with what we got coming up, you never know. They're algorithms. They interpret a number. It's not like having a rational discussion and going like, well, I don't know, but what about here? We've got that going on there. It's like, no, it's a number that's telling me to do this. And that's kind of what happens. I'm not going to leave that up because we're not certain. But if that was the two had to be there, this is what we're looking at. And that's what I'm talking about. I think initially, quickly, 382, quickly, 50%, quickly, 62%. Ding, ding, they just start taking. And each time it breaks, it's going to give an algorithm and just traders the green light to go. Take it to the next. And so those are when we'll see that risk on trade just getting hit in terms of getting taken. All right. Um, I went over the data that we're supposed to be getting. So tomorrow we have, just to recap, tomorrow we have ADP, employment price index, and that is delayed from September. Industrial production capacity utilization also from September, and S&P final U.S. services PMI and ISM services. That's all coming out tomorrow. So we could get a little bit of reaction either way. If the market likes it, then the algorithms, I think, will just buy, will dump back into that risk on trade, and the markets will move higher. All right, I'm going to end it right there. Our next update will be tomorrow morning.